everyone, it's Erin, account executive and mortgageologist. Welcome to my channel. DSCR loans are designed to help investors qualify for purchases and refinances on rental properties without any personal income documentation. That means no tax returns, no pay stubs, no employment information, no DU, no DTI. You get the picture. Okay, that last one may have been a Bed Bath & Beyond coupon. But we don't need that either. So this loan program is perfect for investors who would not income qualify with conventional financing, who have too many finance properties for traditional loan programs, or for investors who just want a quicker close time with less documentation, or for investors who drink water. So in this video, I will tell you what DSCR loans are all about. With 20 years mortgage experience and as a top performing mortgage AE, I give you inside knowledge behind closed loans so you can say yes to more borrowers and start closing more loans now. So hit that subscribe button and let's get started. So since we don't need any of the borrower's income docs nor employment information, we are instead analyzing the borrower's ability to repay the loan by looking at the property's income potential and calculating what is called a debt service coverage ratio, or DSCR. This is basically a fancy way of saying that we will divide how much the property can rent for each month by the property's monthly mortgage debt. Let's look at some examples. Can we get an air purifier in here or something? Let's say a rental property generates $2,000 a month in gross rental income, and the full mortgage payment, or PITIA, is $1,600 a month. To get the DSCR, you will divide $2,000 by $1,600, which is 1.25. Just a note, a DSCR over 1 means the property is generating a positive cash flow because the income is more than the payment. Now let's switch it up and say that same property with the $1,600 a month mortgage payment is generating $1,600 in gross rental income as well. That means the DSCR is 1, which will happen every time the rental income exactly matches the full mortgage payment. Now let's say the same property with the $1,600 a month payment is only renting for $1,200 a month. 1,200 divided by 1,600 is 0.75. Anything under 1 means the property has a negative cash flow. But great news, there are still DSCR mortgage options out there for negative cash flow situations. DSCRs under 1 typically have worse pricing with more LTV or score restrictions, but it's nice to know there are still great options. Now that we have had a refresher on elementary math, you may be asking yourself, how do I know what number to use for the rental income in the DSCR calculation? And sadly, there's no way to know. Oh, there is. And fortunately, there is a way to know. Let's take a look. Let's first look at a property used for traditional long-term leases. If the transaction is a purchase, you will usually take the amount the appraiser determines for market rent on the comparable rent schedule that is completed with the appraisal. If the transaction is a refi, rate and term or cash out, then you would typically use the lower of the market rent determined by the appraiser or the current lease in place. Now that you feel you have a really good grasp on calculating DSCR for long-term leases, let's advance to short-term rentals, which would be like an Airbnb, VRBO, and similar. Rental income generated by short-term rental properties is typically higher than long-term leases. So when a property is a short-term rental, it usually produces a more favorable DSCR to use the short-term rental income for our DSCR calculation. With both purchases and refis, you still have the option to go off market rent per the appraiser, but you could also use the most recent 12 months rental history statement for the property. For purchases only, lenders can pull what is called an AirDNA report that forecasts short-term rental income for the property. Or for refis, we could use the 12-month statement showing actual short-term rents received. But please remember that with short-term rental income, you have to consider a full 12 months to account for seasonal fluctuations. And lenders will typically take a percentage, like 80% of the rental income calculated, to use in our DSCR calculation to account for expenses like cleaning between stays, advertising, furnishing, you know the drill. This quick sidebar, and it's really more of a personal favor. Every time I post a new video here on my channel, I get bombarded with messages from viewers asking where you guys can download these sick beats I'm playing in the background of my videos. Dave from Florida just wrote in, Erin, where can I tune in to the little ditty in your last down payment assistance video? I want to two-step to it in the mornings when I'm getting ready for work. There is no way I'm going to disclose where I'm getting these sweet jams. It's me and the music. Package deal. You guys are going to have to tune in here to listen. Because these are business purpose loans, they're not subject to TRID, so there are no initial disclosures, no LEs, no CD waiting periods, and no other TRID waiting periods. Additionally, many states allow loan officers to originate DSCR loans in states they don't hold an NMLS license in. Run that back and hear it again if you need to. More fun facts, DSCR loans do not report on the borrower's personal credit. The borrower can close in an LLC if they'd like, and best of all, there's no limit on the number of financed properties. Since these are no income doc loans, purchases and rate and term refis typically go up to 80% max depending on the DSCR credit score and other factors, and cash out up to 75% max. Although we don't need income docs, lenders still need asset docs for down payment, funds to close, or reserves. But you'll be happy to know that both gift funds from a family member and business funds are allowed towards the down payment on purchases. And for cash out transactions, the cash back to the borrower can be used to meet any reserve requirements. Prepayment penalties are standard with DSCR loans for states that allow a prepayment penalty. The periods range from 1 year to 5 years, and of course, the longer the prepayment penalty period, the better the pricing. Property options for DSCR loans include condotels, non-warrantable condos, mixed use, and even up to 8 units. First-time investors are allowed with certain restrictions, not to be confused with an actual first-time home buyer, which is actually okay too, as long as there's another borrower on the loan who is not a first-time home buyer. We also welcome foreign nationals for our DSCR programs, so if you're not doing business with me yet, my contact information is pinned in the comments below. As you have seen, DSCR loans are a great way for loan officers to help more borrowers while closing more loans. Thanks so much for visiting my channel, and I'll meet you right back here for more insider info behind closed loans.